Hey there traders, welcome to the trading room. Today I want to have a quick talk about the UniRenko bar type. For those that have used UniRenko bar types will know that they're a fantastic tool that we can use for our trading. And we use a lot of UniRenko bar types. We only use minute-based charts for breakout style trades, which are time-based. But all our discretionary trading work is all done with UniRenko bar types. And let's go into why now on the charts. If I bring up a UniRenko chart, I'll first explain what the difference is between UniRenko and time-based. A time-based chart has a new candle every X amount of time. Simple, right? A UniRenko is very different. There's three different parameters which we'll explain in detail in just a minute. One is the open offset, one is the reversal bar, and the other is the trend. Okay, so you've got the offset, you've got the reversal bar, and you've also got the trend bar. And the great thing about UniRenko is they're completely customizable to your own style of trading. There is nothing set with UniRenkos. You can choose how you want them to look. And the biggest advantage over time-based charts is that we only get a candle if our parameters are met. So for example, in this chart here, we have a tick trend of 9, a reversal of 48, and a open of 24. So if we do a bit of a zoom in here, and we check out the UniRenko bar type here. Now what you'll notice is with a tick trend of 9, every one of these blue bars in here, every one of these blue bars, and every one of these red bars in the middle are 9 ticks, right? 9 ticks. We got 9 tick trend. Now how the reversal works is any bar, as you can see, here's a great example just there, there's one there. Where you see a change of direction, what that means is the market has to go, we've got it set to 48, 48 ticks the opposite direction, and then a new bar will be printed, and that will be in the new direction. And then every bar that you get an extra 9 ticks beyond that, a new blue bar will form, and then continue, and then same with the red. If you get 48 ticks in the opposite direction, then each bar that pushes down by 9 ticks and doesn't go up by 48, right? Each new bar down will be worth 9 ticks of trend. Now, there's also another very important setting on this, and it's the open offset. So the UniRenko bars are well, they're not a real bar. They're not showing you exactly what happens in the market. You see the extremes of the up and the down range, but you don't see exactly what happens. Now, the open offset basically means we've got our this candle here closes, let's get the price here, closes right at 12,943. Right, this is on gold, 12.94.3. We see this candle just in here, 12.943. Right? Now, what happens is the next candle actually opens, we got set to 24, 24 ticks down. So effectively what we're doing is we're removing any noise between here and here because we don't need to see it. Now, if the bar was to protrude back through 24 ticks, as you can see on this one just in here, you can see it did come down by a few more, but it didn't post 48 ticks to be a full reversal candle. So you see a little bit of a pin bar, and then it continued up and kept printing new ones until we got to this reversal bar here. And this reversal bar went 48 ticks the opposite direction. So this here will be 48 ticks plus the trend. Okay, so UniRenkos are a fantastic tool to be able to customize your own trading. Now we use different charts. This is our longer term chart, so we can get a very good understanding of the market and get rid of most of the noise that we don't need, and we can see the very important swing levels. We don't see all the little boring old swing levels that are created by just random minutes that don't really mean much to the market. We trade with price action. We're looking at price action. We want to see where the best areas are for us to trade, and to do that, I believe UniRenkos are a fantastic tool to be able to really fine-tune the way you look at the market. So this is our longer term chart. Now if we bring it down another level, we've got our medium term chart here on gold, just here. I'll just clean up this stuff. And if we zoom it in a bit further on this one, you can see how smooth the trends look. It's very easy to draw trend lines. It's very easy to draw channels. It's very easy to draw Fibonacci's, right? It's very easy to do chart prep, and it's very easy to understand market structure. When you've got a minute-based chart, it's very different. It's very hard because you could be looking at a 1 minute, a 5 minute, a 10 minute, 15 minute, and they're all going to show you something slightly different, right? If you hone in on what suits you as far as the UniRenko settings, they can really do a great job of getting in all the noise out of the market, keeping your charts really clean. They give you indicators a much easier easier look, because you're not really getting all the data from all the junk that, if the market stays in a 10 tick range for, 2 hours, we see one candle. Because it's unimportant what happens between going up, 5 ticks up, 5 ticks down. Who really cares? We want to see what happens overall in the market. We don't want to have, if we're looking at a 1 minute chart when there's only a 10 tick range, we're going to see 120 candles of nothing. Right? With the UniRenkos, we don't. We see one candle, as long as it's within that 10 ticks. Now, this is our medium-term chart. Now, our medium-term chart, we use a trend of 3. So every new candle upwards is 3 ticks higher. We use a reversal of 16. So every reversal bar, or every time you see a change in direction, it has gone 16 ticks in the opposite direction. And we use an offset of 8. So every time we open a new bar, the bar will actually fill 8 ticks below. Now, that is obviously artificial. It's not how the market really opens, but we're getting rid of all the noise in between, because who really cares what happens between, let's say we zoom in here. Who really cares what happens between the high of this candle and the low of this candle? Does it really matter? Is that going to make any difference? 1304, 9.9 down to, let's say 1304 even, somewhere around there it is. Does it really matter what happens in there? Not really. We're looking at the overall structure of the market. We don't want to see every tick. Who really cares? Okay. Now, if you do trade with every tick, well, obviously it's different. But if you're looking for overall market structure, this is our longer term chart. And if you're looking for overall market structure, then these charts, in my opinion, are very, very handy. Now, we also do our trading with them. So you can see here we've got a very short-term UniRenko. Now this one has a tick trend of 1, a reversal of 3, and an offset of 2. So this is a very, very tight little chart. And it's great for Fibonacci's, it's great for trends. It cleans up the chart. Even on a short-term chart, it still looks pretty neat and tidy. Now I'll bring that up. Here's gold on the UniRenko. Okay, this is from about, let's say 10:09 through to, let's say an hour, 10 to 11 today. I'll bring up the gold chart here on the 1 minute from, let's say 10 to 11. This is what you see here on 1 minute. And this is what you see on the UniRenko. Right, same time frame. I know which one I prefer. It's much cleaner, much easier to see. Right, you can see this area here when that uptrend finishes around this area. When we hit those highs, start hitting those highs, you can see it's very clean. It gets a bit messy through here, right? And it's easy to look at the chart. So if you haven't looked into UniRenkos in the past, I encourage you to go check them out. They can be found at the Big Mike Trading Forum. They're free to use. You just need to obviously be a member down there, I believe. The Ninja Trader have them as well. They're in the Ninja Trader forum. They're floating around all over the place, so you can pick them up. I've been using them now for about a year and a half, and they've been a great tool in my trading, and they've helped my trading out tenfold compared to when I used to just use minute or even range or Renkos. These are the best of everything. You can use a tick chart, which will give you ticks. You can use a range chart, which is similar, but every bar is the same range, so you can't tell the bar type how far you want it to come back to be a reversal bar. You can use Renkos, which tell you nothing about what happens between the new bar or the old bar or the one that's coming up. You don't see anything, so there's no wicks, there's no nothing. So this is really in my opinion, the ultimate bar type for complete customization. And I tell my traders all the time, you need to create a niche in the market to be able to extract money on a regular basis. And when you have that niche, when you have that thing that's yours, that sits well with you, that works well with you, that sits with your psychology, your risk profile, all those things, that's when you're going to be successful at trading. Thanks for watching, guys. I'll see you in the next video. Bye-bye for now.